Hello, everyone. Welcome to the market update slash stock specific class here for Tuesday, November the 23rd. Just a reminder that since Thursday is Thanksgiving, that there will be no stock specific class that day. We're going to kind of do both of them today, although I really wouldn't recommend getting into any new trades right now. As we go through the market update, you'll see why. I'll point out some of the patterns I like that are already in the watch list that we have, because there's a few of them that look pretty good. We're just waiting for confirmation, and we're waiting for the market to kind of start moving back up again. I do want to point out that although we're selling off a little bit, well, we have a little bit of a mixed market today with the Dow up, but the S&P and NASDAQ are down. We'll look at those charts here in just a second, but this is something I've been worried about. You've heard me talk about wanting the market to pull back a little bit ahead of this week. Typically, this week is a very bullish week, but the fact that we didn't really pull back ahead of it, it could end up being the opposite. We could see more selling this week than we're used to. Although I would anticipate that most of the selling for this week, at least, will be done today. There's a lot of, you remember, the big institutional traders are the ones that move the market. The retail traders are just not big enough to really move the market much. Typically, the big institutional traders are going to take time off this time of year. In fact, a lot of them end up taking Wednesday off and having a big long weekend. They don't trade on Friday, and then it just allows them to have some true time off when the markets aren't really usually doing a whole lot. So we'll probably see lighter volumes tomorrow, very light volume on Friday, typically. That could lead to a little bit of a bounce. I would imagine that retail traders would be a little bit more likely to kind of buy the dip, so to speak. I kind of anticipated this from yesterday, that the big institutional traders would probably continue to sell off today, again, ahead of when they usually start taking time off. Exiting any positions they'd probably look to exit, or taking profits off of trades that they've already made money on. But it's possible we could see a little bit of a bounce on tomorrow or on Friday. I just don't see the market having a big rally here. In fact, I could see a little bit more downside possibility. And we'll check that out here as we look at the charts. But as far as the direction alerts, again, we're just kind of sitting here, kind of in this buy range here. We're not overbought, which is why I think, and I've mentioned this a number of times over the last few weeks, that any pullback here will likely get bought, and it's just a matter of how far it pulls back. But it will likely continue to move higher until we start to hit that extreme level. The breadth indicators move back into trending. Sentiment is still pretty high, and that's another reason why I would expect that there's a little bit of dip buying that would take place. What does concern me a little bit is that there's a lot of the stocks have already been beaten up that are continuing to drop, and now we're starting to see some of the stocks that have avoided that big drop, that have been kind of leading the rally, starting to give some bearish reversals. Some of the chip stocks, Nvidia, AMD, having a little bit of more of a bearish look the last couple of days. And if those start to correct, we could get a little bit of a bigger correction. Although, again, I'm not expecting a real large correction here, but it could lead to a few more days of maybe pulling back a little bit. A couple other things to look at. Buy-sell ratios. The buy-sell ratio of the overall market that we look at from time to time is below 1. Remember, when you get below 1, it's not usually a good time to be looking to buy, which is why I'm not going to really be I'm not going to get into anything today. far as the portfolio, I'm actually going to be stopping out of a couple trades. I was going to probably stop out earlier in the day, but I thought I'd wait till class to kind of go through it in case there's new people that don't know how to go through that process. But that's usually a sign. Again, when you're with that buy sell ratio, this is if the entire market is below 1. It's usually a sign not to. It doesn't mean you can't buy anything. If you see a great pattern, you go ahead and trade it, but it just means you don't want to be loading up. You don't want to be doing a lot of buying in that condition. And hold on here. And so, we're not, like I said, I'm not going to really be doing anything, adding anything today because of that. Sentiment is still not in the extreme level. It's kind of pulled back a little bit along with the market. So let's take a look at some individual charts here. Let's switch this over to candlesticks. Apologize for my voice a little bit today. I went to an NBA game last night and was yelling pretty loud and kind of lost my voice a little bit. So so kind of bear with me a little bit today. So here you can see that, and this was a little bit of what I was worried about going into the end of last week. I know we didn't have an update since Thursday, but I was worried that we were starting to break out, but we had this, it just was looking like it, well, not so much on this one, but the QQQ chart, it was looking like it might be a false breakout, and it's looking more and more like that. What I'm looking at here with the S&P, although we did kind of break out higher as an intraday high yesterday, the fact that we gave that up, and not only did we give that up, but we closed below the low of Friday. That's a pretty bearish signal there. We have a little bit of looks like a little bit of an indecision candle so far today, but it looks to me like we're in kind of a C leg of a ABC pattern, this being wave A, wave B, wave C. I would expect us to at least come back down to, that 461 level, somewhere in that area. Somewhere in here. We could possibly come all the way back to the breakout. Remember, a lot of the other markets have already done that. I shouldn't say a lot, but the Dow has done that. We'll look at that chart here in a second. The Russell 2000 has done that, come back to the breakout area. In fact, in many cases, they've actually broke below that breakout area. But there's definitely some room to the downside. Here's the Dow chart. You can see now the Dow is up today. It's trying to rally, and you can see why it's trying to rally. It's right at that breakout area. I don't know if that's going to hold. The fact that again, over the last 3 days, we've kind of moved a little bit sideways. Remember, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. The previous direction was down heading into that sideways move, so it might have another leg down still. So I don't know that I would trust that rally in the Dow. Now, again, all this can change, and our job is not to be market predictors. And when I go through this, I'm not trying to predict what's going to happen next, because we can't do that. We can't know what the market's going to do in the future. It can always change direction. What we're trying to do, though, is see the behavior, see what it's likely to do, or try to forecast what it's likely to do based on the price action, based on the chart pattern. And that's why, again, based on probabilities, whenever you see a stock moving sideways, the probability is it's going to continue to move in the direction that was moving in before it moved sideways. So I would be less likely to trust the rally today, more likely to think that it has a little bit further to drop. We'll see if that ends up playing out that way. The Qs, I think what's interesting about the Qs is not only did we get this bearish reversal day yesterday, you can draw a trend line. I don't know if I'll be able to draw it straight, but you can draw a trend line up through here, and it's I don't think it's a coincidence that we reversed right at that upper trend line there. So the fact that we're down again today doesn't surprise me. Now the breakout area is a little bit lower down here. Could we get down to that point? It's possible. Now because we did break out higher here, we did go to a higher high. I don't know that this would be so much a C leg as it could be just a wave A, meaning that we could have wave A. Maybe we try to bounce, possibly. It could be a little bit of a buy the dip over Wednesday and Friday. Retail traders possibly buying the dip and then having maybe a wave C that comes down to that breakout area. But usually when you see, well, it's possible it could be something like this where you do get a straight couple days pulling back and then go higher. But a lot of times you're going to get that ABC, that 3-wave move on a correction. And we'll see. We'll see what happens there. I mean, it could depend on how strong the buy the dip crowd is, if they're able to push it higher. And you can tell a lot of times when the market starts to try to rally, you can tell if you can trust the rally. You look at a couple things. You look at do you close near the highs of the day is a big indicator of whether to trust a rally. A buy the dip type rally. Do you see higher than average volume? If it's very light volume, if it's trying to rally on very light volume and it's off the highs of the day, it's usually you don't want to be buying into that. That shows a little bit of a weaker bounce. It typically is one of those suckers rallies or false rallies that can create that kind of that wave B type move. So if you do start to see it rally over the next couple of days, keep an eye on those two things. Is a volume lighter, which it likely will be because of the fact that those institutional traders just aren't going to be there the rest of the week. But do you see the lighter volume, and do you see it close off the highs of the day? That can, like I said, that could be a signal that it could be that suckers rally. The Russell continues to move lower. It broke through. Here was its breakout area right here. It's broken through that from the last few days. It's broken through that. There is a little bit of support possibly right here that it may try to bounce off of. But that's not a good sign when you're seeing the small caps. So the small caps, you're looking at a larger number of stocks, 2,000 stocks that it's tracking, and so that tells you the breadth. It's a reflection of the breadth. It tells you the majority of the stocks are falling. Whenever you see the Russell 2000 drop or move up at a higher percentage than the other indexes, it's a reflection of breadth because of the fact that it's tracking so many more stocks. We're not quite down at 1%, but we're down, over 0.75% versus the other indexes that aren't. Well, the Nasdaq's down over 1%, but the S&P and the Dow aren't. Dow's actually up a little bit, but it's just showing that there's a lot of stocks that are dropping today. Bonds have started to drop. That came after. Well, a lot of it happened yesterday when when Chairman Powell was appointed for a second term. The market is expecting that inflation is going to continue to be a problem, and so we've seen the bond market drop a little bit here. Now, obviously, the bond market turned a little bit more bearish a little while ago. We pointed that out where we were reaching higher highs, higher lows. We now have a lower low right here and a lower high. So it's acting more like a downtrend. I would anticipate that bonds are going to continue to move down. and we should take out this low right here. We should go to a lower low, but that's something we're going to watch. If it reverses back up again, if we start to suddenly rally back up and it gives us a higher low, then we're immediately going to be looking at a range. We're going to be looking at this range here and this high up here and this low down here. We did this with gold because if it suddenly reverses back up again, it was trending up and now it looks like it's acting like it's trending down. But if it reverses back up again, now you're caught in this range. So you want to just focus on the range, wait until you break out above here or break down below here. Otherwise, you're just going to get your focus is going to be whipsawing in this range. You know, it's the price action at that point would be telling you it's not trending. It's moving sideways, and so you don't want to start trying to predict the direction. You want to wait till it breaks out of that range to get a better feel of where it's headed. Although gold, after breaking out, has come right back down again. We'll look at that chart here in a second. It's kind of back into that range again, and so we have to kind of focus back on that range. But bonds, again, right now they're acting like they want to go lower. They're acting like a downtrend, or at least in the early stages. So I would anticipate that that's going to continue. Gold, I mentioned, we finally broke out of that range. Let me move up a little bit on the chart here. We were looking at this range right here. We finally broke out of that, and we're moving sideways, which, again, whenever you're moving sideways, you want to pay attention to the direction you're moving in before you move sideways. That's where you're more likely to go after you're done moving sideways. But this is an example of how it doesn't always, it can make the lower probability move. That would be the higher probability expectation. But, you know, the market can always do whatever it wants to do. And here we saw gold drop right back down into this range. It's down lower today. And so we're going to be focused on this range again. We're going to be focused on, obviously this is an impulsive move down. So that's an early stage of a trend, early look of a trend reversal. What you start to look for is do the rallies fail, and then you end up with lower highs, lower lows. You know, so start acting like a downtrend. This is clearly an impulsive move down, so you would expect a rally to be just a bounce for another move down, unless you start to get an impulsive move back up. But there again, since you're back in this range again, if you got an impulsive move back up, you'd want to see it break back out again before I would want to be buying it. I'm not a big fan of trading gold. You know, what I've found over the years is that commodities tend to trade a little bit different than stocks. And so usually if you're going to be successful trading commodities, that's what your focus is. You only trade commodities, you know, gold, oil, you know, wheat, you know, all the different commodities. You just tend to focus on that, and that's what you trade. You kind of develop your specialty that way. But yeah, gold tends to make moves that I don't understand sometimes, but commodity traders do. You know, they say, oh, this makes perfect sense because, like I said, there's little subtle differences. For one thing, commodities sometimes can stay overbought for a while, so you actually want to see strength and see them extended and keep trading them when they're overbought, which is just the opposite of what I typically do with stocks. You know, when you get overbought, you start to get defensive. You start to look for bearish reversals at that point. So there's some differences between commodity trading and stock trading. But yeah, gold definitely is sold off. It's in an impulsive move down. We'll see if that continues to trend lower or if it reverses. Oil, on the other hand, looks very bullish. It looks like it's coming out of a correction right here. This looks like a pretty textbook ABC pattern. Wave A, wave B, wave C. Nice sharp move up today. There's a lot of oil stocks that are looking like they pull, very similar charts, so they pull back, they look like they're trending back up again. And this is actually you would expect with the announcement today that they're going to open up the strategic oil reserves to try to lower oil prices. All the experts are saying it's not going to do anything, and the chart is showing that too. You would expect that if that's going to flood the market with supply, you would expect oil to be dropping today. But the fact that it's had a strong move up, the market is telling you that that's going to have no effect on the price of oil, which is a little depressing. If you fill up your car with gas, you know what I'm talking about. It's like every time you go to the pump, it's like, I can't believe I'm paying $4 a gallon for gas. My kids are all kind of in their young adult age, out of high school, and kind of getting on their own now. And I tell you, there's no group of people that notice the price of gas going up more than that group of people that are that are just kind of getting on their own and realizing they have to pay for their own gas now. Dad doesn't fill up the tank anymore, and they know which gas stations are lower than others, and it's kind of funny to kind of watch that they're very aware of the movement of oil right now, the price of gas right now. But again, this puts another focus on some of the oil stocks, and we've been trading a few of those, and we are going to pay attention to a few of them. Some of them haven't gone back to buy signals yet, but they're getting very close, and we might be jumping back into some of those oil stocks if oil continues to move higher. But this is definitely a bullish looking chart. If you're looking for anything to buy in this kind of condition, that would be an area you'd look at for oil stocks right now. They should continue to trend upward. The dollar, this is something that's been a focus too. The dollar's clearly trending up, higher highs, higher lows. Hold on just a second. Now, the dollar, I think, could be a signal for the overall market right now. As the dollar keeps moving higher, it's been very bearish for the market. Now, that's not always the case. I'm not trying to imply that the dollar moving higher is always bearish for the market. Obviously, the dollar's been moving up for a little while now, and the markets have been going to new all-time highs. So you can't say that it's always, that a stronger dollar is bad for the market. That's not the case. I don't want you to draw that kind of conclusion. But there are times when the dollar can get too high that it starts to be bearish for stocks. And I think we're at that level. Now, we're in the extreme reversal risk. We're not the far right side of that extreme reversal risk. But I don't anticipate that we're going to see a strong rally in the market unless we start to see the dollar pull back a little bit. I don't think it's coincidental that we've had these last couple of big moves up and the market has been down or showing some weakness the last couple of days. Now it is trading a little bit lower than where it opened today, a little bit of an indecision day. Again, if you listened to earlier in the update, I said that it's possible we get a little bit of a bounce or rally. It's possible we could get that tomorrow or Friday. Maybe we see a little bit of a pullback in the dollar that fuels that a little bit. But the trend is still up. I'm still expecting the trend to continue up. And here we got 2 days where it pulled back and it was off and running again. Maybe that happens where we get a little bit of a pullback, but I'm assuming that that's not a real strong bearish reversal candle. It's more of an indecision candle, a pause, so to speak. Sometimes that could lead to a reversal. You get a little bit of a pause in an overbought condition, but the trend is still up. We're not, like I said, we're not the far right side of that extreme range, so there's still room to go higher. I would assume that the dollar is going to continue to move higher until I see anything different. But that's something to keep an eye on. I think if you see a day where the market's rallying and the dollar's pulling back, especially if it's pulling back in a strong way, that maybe you could look to buy something. It could be a signal of people buying the dip. That's something you could keep an eye on. The VIX has been moving up a little bit, not as sharply. We haven't seen any panic in the selling over the last couple of days, but it has been moving up. We had a couple of days where the market was up and the VIX was up, and anytime you see that, that's telling you that those big institutional traders are buying, but they're also buying protected puts, which means they don't quite trust the rally, and I think we're starting to see the result of that over the last couple of days, why they were concerned. We are seeing that the market pull back a little bit, so that was a little bit of a signal there that, not to necessarily trust the rally. But it's also a signal, like I mentioned earlier, that I don't expect this to be the start of a big correction, because of the fact that they're still willing to buy those protected puts. Willing to spend that money to buy that insurance means that they don't. They're not overconfident. I think if we really see a market charge forward and the VIX is just dropping dramatically, that's going to be a signal of that we're heading for a major top and getting ready for a major correction. Because again, what fuels that panic selling, you're not going to have panic selling if you've got hedges in place. If you got your protected puts, who cares how fast the market drops? Your puts are going to go up in value. You're going to offset that. It's when those big institutional traders don't feel the need to spend the money for that protection. They don't want to, why the market just keeps, the dip buyers keep coming in and the market keeps going higher. Why am I buying these protected puts? I'm wasting my money to buy those protected puts. It's eating into my profits. When they finally get to the point where they're like, I'm not willing to spend that money, that's what can fuel that panic selling. Because then when it starts selling, you have to sell. Otherwise you're going to get killed, and that's what kind of fuels that panic selling. So the fact that they're still buying those protected puts, to me at least, is a reflection that yes, we could get a little bit of a sell-off here, but it'll probably get bought. It'll probably start going back up again, because again, when we think of dip buyers, sometimes we think of just retail traders that are dip buying. No, it's these big institutional traders. They've got the protection of those protected puts. They were buying. They weren't quite trusting the rally, which is why they bought those protected puts. The market's come down. They've offset the market coming down with those protected puts. Now they see things on sale a little bit. Some of these stocks that they wanted to get into and pull back a little bit, they start adding to it. So they're the ones that are really the dip buyers, and so that's what can kind of fuel that and keep those pullbacks from getting too deep. Is that those big institutional traders are still buying those dips. So again, we've been waiting for this for a while. I've been kind of prepping everybody for a while, but that's what we're looking for, is that point where we start to get the extreme range on the S&P, the Dow, all those, the momentum, all those things on the direction alerts, momentum, the sentiment, and the you go back here, you can, the momentum, sentiment, and breadth. When they start getting that extreme range, and you have the VIX is dropping, all those little signals can really tell you when a big correction is about to happen. The chip stocks, this is right along with the NASDAQ 100, kind of the same type of thing. We had a bearish engulfing candle yesterday, very high probability we're going to go lower today. We did. Now the chip stocks would have to come all the way down to here to get back to the breakout area. I don't think that's likely to happen, but that could just be wave A, get a little bit of bounce for wave B, and get a wave C. Maybe we pull back into this area right here ultimately. Maybe it's just a real quick, here we had a real quick drop and then we went right back higher again. Maybe that happens again. But we're definitely seeing the weakness there in the chip stocks to pay attention to. Transports actually look a little bit more bullish. Looks like they're coming out of a a bullish ABC pattern right here. Now remember, the Dow is also trying to rally today. I don't know that I would trust that rally because of the other indexes, but again, it actually looks a little bit stronger than the Dow chart. So remember, the transports tend to be a little bit of a leading indicator of the Dow industrials. At least we might want to make sure we're always comparing the Dow transports to the Dow industrials. Usually the chip stocks, the SMH, we're comparing to the NASDAQ 100. If we go back to the Dow chart, actually, we probably quicker to go the other way here. You can see, so the Dow is up a little bit today, but it's been a little bit weaker. You notice on the Dow transports, they've started to move up the last couple of days. So maybe that could be a little bit of a leading indication that we could get a little bit of a bounce here in the next couple of days. We'll keep an eye on that. And who knows? Maybe this is the pullback and we just charge forward again. That's always a possibility as well. Bitcoin could be in the process of a little bit larger correction here. We have gone to a lower low. This looks like a little bit of an impulsive move down. That might be a wave A. We might get a little bit of a bounce for wave B. I don't know that I'd be, if we do get a bounce in Bitcoin, I don't know that I would trust it. It's probably a wave B. We could be in for a wave C coming back down again. Now, this is a bullish inside day today. Had the big down candle yesterday, bullish inside day. You could get a bounce off of that. Like I said, I just don't know that I would trust that that's the end of the correction right there, especially since we've gone to a lower low. But in the near term, we could get a little bit of a bounce, a little bit of a rally there. We'll watch for that, see if Bitcoin bounces a little bit over the next couple of days. Again, some of the cryptocurrencies are very popular with retail traders, so maybe maybe that you get some of those retail traders coming in over the next couple of days that causes that little bit of a bounce. But again, retail traders can't really move the market very much or very far. So it could be what kind of creates that bounce for wave B and then get wave C. I just be cautious about buying into this dip right now. Typically, you're going to have a little bit further correction when you see this type of price behavior chart pattern. All right, that's it with the indexes. Now, let me go to the portfolio real quick. We're back down a little bit here. We were getting close to. We've been kind of sideways for the last couple months, really. Just can't really get going. But again, a lot of that is because we just haven't had a good correction that pulls a lot of these stocks down a little bit. It gives us good entries. We're not seeing a lot of new patterns on when I go through those sector lists. I can find patterns, I can find potential trades, but usually when you're in a great trading environment, there's a ton of them, and the tough part is deciding which trades you want to get into. When you are searching, and remember, I'm going through those sector watch lists, and the same stocks we have on our current watch list are the ones that are still there, and some of those haven't given confirmation to get in yet. So that's usually not a great sign. That's usually not a sign that you want to be overly aggressive. But a couple decisions we need to make. Our stop price on SBOW is 26.50. We're down to 26.05. We're down below that. We need to stop out of that one. Our stop price for LOV was 77. We're down to 71. We got to stop out of those two trades. We're close on a couple of others. We're at 327 on SENS. Our stop is at 315. We can take a look at those individual charts. Now, SBOW, I was kind of going back and forth. I missed the move yesterday. I was really busy that last hour of the day when we started to slide, and I had checked the portfolio earlier in the day. We were okay. We weren't below that stop area yet. Here was our stop, and then we slid into the close. And I was busy with other trades I was doing that I didn't see that, so I should have stopped out yesterday at the close. And when we tried to rally today, I thought, well, maybe that's not a bad thing, because this still looks corrective. It still looks like it could move up again, and it is in the oil sector. It's in the oil exploration sector, but I'm going to go ahead and stick with my stop. And to be honest, we really haven't gone anywhere. We've had, a couple of weeks where we've just gone sideways on this. So I think there's other oil stocks that if I am going to get back into them, or if I am going to add new trades, I'd rather get into some of these other ones that look like they're moving. But so I'm going to go ahead and stop out of this one. And then the next one, LOBE, again, we just blew past that stop. Stop was right in this area here. We just blown past that. GameStop, we were starting to break out on this one the last couple of days. That was giving me some hope that today's a pretty big bearish reversal day. We could, I wouldn't be against stopping out of that as well, just because we're, that's a big ugly candle right there. It's probably going to head lower. We're going to be closing below the low of the previous day. We haven't done that in a long time. I'm just not again. I just wouldn't mind getting to a bigger cash position, to be honest with you. SENS, our stop is down below here. We've come all the way back down to that one. JILL. Again, the reason for this is it looked like we were getting a little bit of we got a little bit of a pullback. We were starting to move back up. It looks like maybe this is wave A, wave B, wave C. We are getting down, though, to a level that this needs to start moving up here pretty quick. I'm going to stay in this one, though, because it still looks like it could reverse back up. RCMT is still looking okay. It's down a little bit today, but the overall pattern still looks pretty good. LLY, this is another one that's possible that this is wave A, wave B, we get wave C. I was looking at this as ABC right here, and it did start to move up, but then it's kind of come back a little bit. But this one's still holding up okay. It's up a little bit today. So I'm going to go ahead and hold that one. But let's go ahead and get out of SBOW. Current price is at 26. So we sell 300 shares at 26. Now keep in mind that we got in at 21.95, so we are getting out of this at a profit. We had moved our stop up a little bit. We've been missing for a little while, so that's a good sign. LOBE, though, it's not. We got in at 84, so this is going to be a little bit of a hit, and we're below our stop price, so it's going to be a little bit of a bigger loss than we were anticipating. So we're getting out at 71.14. Yeah, it's about a $1,500 loss. Typically, we're trying to keep our losses around 1,000 to 1,200. End up being a little bit more on that one than we were anticipating. And I'm going to go ahead and get out of GameStop just because I just, I think there's probably a little bit further, and we can always get back in it again too. But I just don't like the way it's. And we'll be able to make a profit on this because we got in at 206. We're at 215.63. About a $300 profit. Let's go ahead and take that off the table. So we're getting a bigger cash position now, which is good. We don't, because if things turn around, then we want to have that cash to be able to put into patterns that are taking off, and we can wipe out that deficit here. We're looking at about a $9,000 deficit. We can wipe that out pretty quickly if we can get into some new trades. Now, one thing I am going to add today is a little bit of a hedge, and I should have probably done it yesterday. Well, I don't know. I may not do it. One thing you can start to look at is I keep this inverse ETF watch list. I've talked about this before. These are ETFs that are opposite, that move opposite of the indexes. So if you think the S&P is going to drop, you can buy the SH. It'll go up as the S&P goes down. So it can be a way that you can still be long. You don't have to short the market if you're worried about, because shorting is risky. It's more risky than buying. And some people don't know how to short, or they're uncomfortable shorting. And so this is a way that you can still be long the market. I can buy the SH and it'll go up as the S&P goes down. We can look at some of those charts here, so you can see that the SH is starting to go up a little bit as the market is pulling back. What I was thinking of doing is buying the QQQ. So pull all these up here so we can look at them. So the SH and then the SDS. The SDS is a leveraged ETF. So basically, if the S&P goes down $1, this will go up $2, or at least that's the concept. Is that it's leveraged. You don't want to use these. You don't want to be doing this long term, but very short term. Sometimes you can do the leveraged ETFs, and they can outperform, but over time they won't outperform. And so they need to be very short-term trading instruments. But what I was considering was the NASDAQ one, which is the Dow inverse is the DOG. Now, this could be what you could consider if you think that this is that we could get a little bit of a false rally. Today's a little bit of a false rally. This could continue to move up. The one thing I'd be worried about, though, is again the DIA has what looks like a possible bullish ABC pattern. This looks like a possible bearish ABC pattern. If the market does rally, this will go down. The DXD is the leveraged Dow ETF. PSQ is the NASDAQ 100. This is the one I was looking to buy, thinking that NASDAQ could drop a little bit further. I don't think I'm going to do it. Because again, I don't think we're going to have a big drop here. I think it's just going to be a smaller pullback, maybe another day or two, and then we might see some dip buyers come in. So now, if I see a larger correction about to take place, I'm going to be out of stocks, and I'm probably going to be buying these inverse ETFs, probably all, maybe even all four of them in the portfolio. Because if the market's going to pull back, I want these to go up. Here you had a market pullback and these went up a little bit. You can make it so you can able to make a little bit of money on the pullback as well. But I just don't see this pullback lasting long enough to where I think it'd be worth doing. I was toying with it a little bit, but I don't think I'm going to do that. Real quickly here, let's take a look at stocks in our watch list here that we do want to pay attention to. In fact, we can turn the signals on these two. ARC, it's a printing company. This could be a little bit of an ABC. If it starts to move up again, it goes back to a buy signal. This could be one that starts to break out, but not quite there yet. NOG is an oil stock, but again, this looks like it's completing a larger ABC pattern. If oil continues to trend up, this should start to move back up. Now it's gone to a sell signal, so it'll take a little bit of time to get back to that buy signal. But this is one that we'll keep an eye on. AMC, it's not looking the greatest here. EH was not looking very good either. Riot, not looking the greatest. MOSY, I might bounce this one because it went to a lower low. It was starting to look like it might be turning the corner right through here, but now it's gone to a lower low. I'm going to boot that one out of the watch list because I really don't want to be considering that one right now the way it's acting. MVIS still hasn't gone to a lower low yet, but I was anticipating that it could be turning the corner right here, kind of get a little bit of a V-shaped move. In fact, I'm going to go ahead and boot this one out as well, because I think because it'll show up on the scans again if and we'll see it again if it starts to move back up, and we'll probably get another chance on that. I'll boot FRD. Now this is again one that it had that couplet handle formation, and we see the results of a lot of couplet handle formations, and it's easy to assume they're always going to work. But when I say it's not guaranteed to work, there's a reason why I say that, because this could happen where it just falls apart. It doesn't mean that that's not a bullish pattern, and it doesn't mean that most of the time it's going to go higher off of this. But you just have to realize, and sometimes it's good to see patterns that don't end up working out, because it keeps you from getting overconfident. It keeps you from feeling like it's guaranteed or it has to make that move. I don't know what came out, but obviously there was some news that came out. Could have been an earning announcement or something. Usually you don't get that big of a move. You can get that big of a move with an earning announcement, and earning announcements can go either any way, and they can go opposite of what the chart pattern is suggesting. That's why I don't like to trade earning announcements. They seem to be more of a guess than anything. If you guess right, you get rewarded, but you guess wrong, you get destroyed. I'm going to go ahead and boot that one out because I don't like that the way it's traded over the last few days there. FTech, I'm going to boot this one out too, because again, the expectation was that this was holding. Well, I'll keep it in there because it could still hold this support level. It looked like it was moving up and then pulling back right through here. It looked like maybe it could move higher. I wanted to see a little bit more evidence in that, and it's a good thing we didn't buy into that one. CONN, it's not too bad. AMBA looks really good. I still like this one. Looks like it's just in an ABC pattern. Looks like wave C, and it could still drop a little bit further and still be okay. Here's the breakout area right here, so you'd want to see that hold, but it could still go down a little bit if the market continues to sell off. But this is one to keep an eye on. If it can hold that, start to move back up to a buy signal, I'd be all over that one. And this is in the semiconductor sector. Kirkland, KIRK, still looks okay. It's selling off, but again, it looks like it could be in just that C leg of an ABC pattern. STKS, same thing. It's just kind of pulling back with the rest of the market. AEHR. Now, typically, if this is an ABC, wave C, it'll usually end when wave C is about the same length as wave A. It's gone. If this is wave C, it's a lot longer than wave A, so that concerns me a little bit. Although it came off the lows yesterday, today it tried to rally and fail, but it's showing that there's some buyers in this area. Buyers pushed it off the lows. Buyers pushed it up to the highs right here. Sellers pushed it back down. There's a little bit of a battle going on between buyers and sellers. Not too surprising that it's right in the previous breakout area that's happening. So I'll kind of I'd still keep this in the watch list to see if it can manage to rally from here. If it does, that could be a good sign. It's showing you that buyers are there. PERI, not looking great, but again, this could just be wave A. We could get a bounce for wave B, wave C. I'll leave that in there for now. KOPN, I like this one still. Off the lows, had a impulsive move up. This is looking just like an ABC. Again, this one is getting to the point where wave C is already about the same length as wave A, so you'd want to see it find a little bit of support. It had some buyers today that pushed it up. It's still higher than where it opened. This is a little bit of a bullish price action today if it can hold this, but not enough to where I'd want to buy into it. We're still waiting for that confirmation to go back to a buy signal, but this is one that I would be very interested in if it can go back to a buy signal from here. Looks like it could be turning the corner. That's kind of gone to a lower low. I'll probably boot this one out. Because again, it looked like it was turning the corner, higher highs, higher lows, but now it's gone to a lower low. ATOM, that's still looking pretty ugly, but I don't see a reason to boot that one out just yet. I don't want to boot everything out. This is still not too bad. I mean, this could be an ABC. It did go to a little bit of a lower low right here. But I could wait on this one to see if it can hold this area. It's still, if it can hold and start moving back up. LOP, and then we're back to ARC. So again, there's a few of them in there, not too many, but there's a few in there that we could be looking to enter if the market starts moving back up. I was going to boot out MOSY and MVIS. And FRD. Might have been a couple of those in there, but I'll look through that again. I can't remember all of them. I was going to boot out of there. All right. So again, maybe not the most productive class for those that are looking for new trades, but always remember, sometimes the best trading decision is to not trade. And I think with everything that we've gone through with the market update and everything else, these aren't the best conditions. Believe me, I'm always, this time of year, I'm always looking to buy because it's traditionally one of the most bullish times of the year, the week of Thanksgiving. But it's just not looking that way this year, and there's just no reason to force it to be bullish when it's not, and there's no reason to lose money. When the conditions are just not in your favor, and sometimes you just have to make decisions to sit tight. So that could be a good thing, if you're going to take up a lot of time this week to be trading. I'd probably use that time to spend with family and take some time off, enjoy yourself a little bit. I know I am. I'm not doing any trading after tomorrow. At least I'm not planning on it. I'm gonna probably use the time to get away from the market a little bit, which I typically try to do during the Thanksgiving weekend. But have a great week. Have a great Thanksgiving, and we'll see you next Tuesday for the next market update. We'll be back to normal schedule, stock-specific class. A week from this Thursday, we'll be back to that normal schedule next week. But have a great holiday and safe holiday, and enjoy your time off. And we'll see you next Tuesday. Bye now.